Well, for more on what's up and what's down with global currencies, let's turn to our expert, Saruhan Hatipoglu. He's CEO of Business Environment Risk Intelligence. Thank you for joining us.
Hi, Rachelle.
Now, Saruhan, let's start with China and the yuan fluctuation. Which sectors, both inside and outside of China, are going to be most impacted?
Well, sure, the basics are the basics. Of course, the export industries are going to benefit from it because they'll be able to export more, a manufacturer that is. Also, Chinese companies that are overseas that are making money in foreign currency, when they convert it into the domestic currency, they will also benefit from that. But there's a lot of industries that will be hurting because if the depreciation continues. Importers, of course, they're going to have a bad impact about it. Auto industry, not many people are talking about it, but less than 5% of China's auto production is going overseas. That means domestic consumption, consumers need to use that, but if the value of the currency declines, that means their ability to purchase goods also declines even at home. So the car companies will be giving generous offers that will pressure their margins and reduce their profits.
And obviously another currency making headlines, the US dollar, which continues to strengthen. How long do you expect that trend to continue?
Well, not for the entire year. Look, the US government itself, the Fed itself, doesn't want strong US dollar to continue forever, right? Because US companies overseas are affected by it. Capital spending is going to decline. And also manufacturers in the US are going to be hurt by it too. A lot of the appreciation of the US dollar has been priced in, even before the Federal Reserve increased rates. So I'm anticipating this to continue on and off. But as the economies in Europe and Japan get stronger, which because of the QE they will, that will have an impact on the US. This has happened in 1994 and 2004 in the United States. Everybody expected after the interest rates were increased, dollar strength would continue, but that didn't take place, and I don't think it will in 2016 either.
Now, another issue, especially for oil-producing countries like Russia, Nigeria, Saudi Arabia, you also have the commodity slump adding extra pressure. So what do you think, how is this going to affect their currencies?
Well, they have a rough ride coming up, as if they haven't already, right? Russia, Nigeria, Canada, Norway, also countries that their currencies have been affected by it. But it's not only a matter of US dollar strength, Rachelle, in this case, it's the demand and supply issues. Demand for oil has declined considerably. And supply, there's a glut of oil out there, so that's going to have an impact on it too. But those currencies are going to suffer throughout most of 2016, maybe with the exception of Norway, because Norway actually is not going to reduce its interest rates. It's a pretty strong country, so they'll keep at least the interest rates high, so it'll fight this depreciative pressure. But the other countries that you mentioned, they're going to have a bad time.
Now, there have been some murmurs. Is there any danger about countries deciding not to peg their currencies to the US dollar?
Well, not really, because let's go back to the Asian financial crisis. When they did that, they could not cushion themselves from the exogenous changes that took place. Now, more and more countries are able to play with their currencies, kind of cushion the crisis that are coming in. Emerging markets have done that very well, and also they have built their foreign exchange reserves. They have less dollar-denominated debt, which is very important because if their currency continues to decline, a lot of companies will not be able to pay their debt. So they're relatively insulated. I'm not saying they're okay. They will have problems too, but not as much as they have in the past.
And you mentioned emerging markets, everywhere from South Africa to Brazil. Their currencies have been taking a beating. Do you expect that to continue through 2016?
It will continue. It depends. I don't like to look at countries as bricks to pick the mints, right? Each emerging market has its own structural issues.
They are unique, yes.
If you look at whoever has done their reforms well are going to actually cushion this crisis much better than others. I'll give you an example. Brazil didn't do it. Indonesia hasn't done it yet, and they have suffered the most. Russia hasn't done it, and we know what's happening. But India and China are relatively insulated from that. But they will have problems. Maybe not as much as people are making it out to be, but they will have problems this year as well.
And just quickly, with so much uncertainty, do you think that could open up the door for alternative currencies? We saw in Greece when they closed the ATMs for banks, people started turning to things like Bitcoin. Do you see that opening that avenue?
Not in the short term, and I'll tell you why. There's some, it's a perception issue. There's cybersecurity risk. Right? They can get into the accounts and steal Bitcoins. About 500 million Bitcoins disappeared in Tokyo a year ago. So people are worried about that. But it's also volatility. and as well as illiquidity of the market yet. So it's not something that will come and save the day. Maybe for short-term crisis like you mentioned in Greece, it's a great term for microfinance. There's about 2 billion people who don't have a bank account in the world. So for them, Bitcoin is going to be a great platform in the future, but it's not something that will mitigate the crisis as we see it now.
Okay, so maybe a short-term solution. Well, thank you so much for joining us.